let's just look quickly now at the PowerTrend stock strategies, and we use the same trend following system to buy and sell stocks. And again, it's we only look at the stock or the ETF on the last trading day of the month, so it doesn't take much time to implement the stock strategy. And again, we use the 10-month simple moving average to time the buys and sells. And again, we use a trend following system, and that eliminates the emotional decision making and subjectivity of our trading, and allows us to just simply follow the trend instead of trying to predict it. And the stock strategy is similar to the asset allocation in that it's not optimized, and it works across a wide variety of markets, and you can change these parameters from the 10-month to the 6-month or the 8-month or the 12-month, and it's really not going to make much difference. So that's to me is an indication that the system is robust and it has a good chance of working going forward, as opposed to an optimized system that's optimized over just a certain period of time or a certain market. So with the buy rule, we want to buy a stock or an ETF if the monthly price is above the 10-month simple moving average, and we want to sell a stock or an ETF if the monthly price is below the 10-month simple moving average. And again, we only check that stock or ETF on the last trading day of the month, and we ignore the other days. So let's look at an example. This is for Magellan Midstream Partners, and I created this chart from stockcharts.com, and again, it's the monthly price data and the MA10, and that will give us the monthly price of the stock, which is this line here, and it gives us the 10-month simple moving average, which is this blue line. So we can see that this stock was below the 10-month simple moving average, crossed above it in April, and that became a buy signal around the 1350 price level. So here's the buy signal right here, and the system went long on the last trading day of April as it was above the 10-month simple moving average. And here's a longer-term time frame, and again we can see the system went long here at around 1350, and the stock is trading around 45 now. So it's caught a nice up move, and as long as that 1-month price of the stock is above the 10-month simple moving average, we want to stay long. So here's an example of the system going long here and stayed long as the price stayed above the 10-month simple moving average. So we're letting our profits run on this one, and we're not cutting our profits short as long as the stock is on a buy signal. Here's what I did was I did a historical testing for this stock, and we assumed that you invested $10,000 in the stock 10 years ago. So that $10,000 investment grew to $65,000 over the last 10 years, and that produced a $55,000 profit and a 550% return. So here's an example of just simply following the 10-month simple moving average and getting a really good return. And again, over this time period, we had, the severest bear market since the Great Depression right here. But the system allowed us to do well over this time period and produced a 550% return over that 10-year period. So what I did was I did some historical testing for a diversified portfolio of stocks in different industries. And the historical testing assumes that we took a $10,000 investment and invested in these stocks in different industries, and we used the 10-month simple moving average system to time our buys and sell signals. And you can also trade call options with these buy signals for these stocks, and I have done that in the past. If a stock or an ETF goes on a buy signal, you can either buy the stock or you can buy a call option. So you can trade call options with these signals. So what I did is I tested these stocks in different industries here: Monsanto, Union Pacific, Sherwin-Williams, Magellan Midstream Partners, Whole Foods, and MasterCard. So these stocks are all in different industries, just to give you an idea of how the system performed over the last 10 years. And a $10,000 investment divided up between these stocks evenly produced, well, the $10,000 investment grew to $82,785. So that's a 727% return. And again, we had the most severe bear market since the Great Depression during this period, and this portfolio was profitable every year over the past 10 years. So despite that severe bear market, the system got us out before any big losses occurred in those stocks. So even though we had the biggest bear market since the Great Depression, the system was still profitable every year with this portfolio. So the system's longer term, but it provides very good profits and keeps your risk to a minimum. So great system for the current market conditions that we're in. Here's the stock ETF current open trade portfolio results here, and we currently have a $72,000 open trade profit, average return of 89.6% for this diversified portfolio of stocks and ETFs using the PowerTrend system. So that concludes my presentation for today, and we just looked at the first part of the lifetime income system, and in upcoming webinars we'll cover some more of the other strategies, and I'm hoping you learned a little bit about how to develop income streams and low-risk investment for your retirement funds, or if you're in retirement, to keep you in retirement. So that concludes my presentation. I'd be glad to take any questions.
Sure. We have some questions already. People are asking, based on the premise of your PowerTrend system, can this be used based on any product out there as long as it's an ETF?
Yes. Yeah. Well, ETF or stock. Yeah. As long as you can track the price of it, whether it's an ETF or a stock or a currency, as long as you can track the price of it, you can calculate the 10-month simple moving average. So this will work on any market that you can track the price.
In the future webinars, and for those of you that haven't been here and heard Chuck before, we do have other webinars, and I'll post up the website where he's got some of his stock selection process and other strategies he utilizes. It's a lot to cover in 40 minutes. But the instruments that you're using on a 10-month NA, should one ever go to cash, Chuck, or short a position, hedge a position? Just a real quick answer, because I know you'll cover that in the next webinar.
Yeah, well, when we're using the 10-month simple moving average, we're long when that 1 month price is above the 10-month simple moving average. And then if the 1 month price that we check on that last trading day of the month, if it's below that 10-month simple moving average, we simply move to cash. And that's the way the system is set up to be low risk.
Okay. Well, Chuck, hopefully we could do part 2 in several weeks, if that's okay by you.
Yes, I'd love to. I have a lot of great information I'd like to look in detail at. We've got some really great strategies with this program. So, and I really feel good about teaching people these strategies because I'm very comfortable with the risk level of these strategies. And like I say, I would, and I have given these strategies to my mother and my and my family members to use because I know that these strategies will keep them out of trouble and yet still provide a good return. So I'm very comfortable with these strategies, and I enjoy explaining them and helping other people to employ these strategies in their investing. So it's great for developing income or if you're saving for retirement.
Well, one last question, Chuck. This is out there from Randy Rich. Have you ever used inverse ETFs in this PowerTrends? And if so, is that something you would cover?
Yes, I have used inverse ETFs, and we did trade inverse ETFs during the last bear market. We had a lot of short positions, which consisted of put option spreads, and inverse ETFs. And I have a relative strength system where part of that relative strength system is inverse ETF. So if the market turns bearish and these inverse ETFs start to increase in price and they have better relative strength compared to the long ETFs, then the system will buy the inverse ETFs. So yes, we have used those in the past, in past bear markets. And I had my advisory service. It's been I've had it in operation since 1999. So we also went through that severe bear market in 2000 through 2002, and we did great with a combination of bullish and bearish positions. And so, yeah, to answer the question, yes, we do use the inverse ETFs.